People in developing countries face many risks. The most common types of shocks are natural disasters, health, price movements, and asset loss. Risks can be devastating and often hold people back from pursuing opportunities. Many people rely on their community for help. What is a community? Community can mean a village or urban neighborhood, a shared location. Community can also mean a kinship or ethnic group, shared culture and identity. In Peru, the Gomez family chose to move from the countryside to a shanty town, where many people from their ethnic group already resided and would offer them help. This is a common migration pattern all over the world. How does a community manage risk? When adversity strikes, friends, relatives, and kinship members are often the source of help. Take, for example, the small village of Nyakato in Tanzania. The village's 120 households have formed no fewer than 40 different insurance groups, burial societies, women's groups, and savings groups. Funerals are well insured, with different groups offering insurance for different portions of funeral costs. Many risks are tied to location, crime, natural disasters, and so on. In rich countries, local governments routinely provide policing, collect garbage, and clear drains. In poor countries, governments often do not provide these public goods. Many communities therefore organize basic protections such as the neighborhood patrols in the Gomez family shantytown or maintenance of basic infrastructure. What are the limitations of communities' risk management? Informal mechanisms help many people cope with modest shocks, but have three main deficiencies. First of all, informal insurance is insufficient in the face of systemic shocks because groups are too small. For example, during the global food, fuel, and financial crisis, credit dried up and informal support became less available as the ability of better-off community members to contribute declined. Secondly, the most vulnerable are excluded. Exclusion keeps people with high needs and limited ability to contribute out of the insurance pool. For example, widows or the chronically ill. A third deficiency with informal mechanisms is that local preparation is often inadequate because of lack of resources and the difficulty of mobilizing collective action. What are the characteristics of a successful community? Community preparation tends to occur when communities are cohesive, have trusted leaders, and receive outside support. The tight-knit rural village of Santa Ana in Paraguay is an example of a such cohesive community that has mastered collective action. Community members take turns maintaining roads, bridges, water supply, and electricity lines. They come out in full force against cattle thieves. They provide a bus driver with a house so that his route covers their village. Trusted local leaders manage community affairs. The community didn't do it all on its own, however. Roads, electricity, and water supply were constructed by government and donors. The community only handles maintenance. Finally, let us look at how community risk management fits with government and market institutions. Communities cannot do it all alone. They need linkage to markets, government, and other communities. One example is women's self-help groups, small savings, credit, and livelihood groups. These groups are useful, but only to an extent. Projects in several Indian states helped thousands of self-help groups link up across villages, creating a well-organized movement comprised of millions of poor women. With strength in numbers, the women can buy food, obtain credit, access social programs, and organize insurance on favorable terms. They gain influence. Women's groups and other community institutions have evolved strong coping mechanisms, but can do so much better when supported by government and when they have access to markets.